Back and we're joined by the management of Chola Investment and Finance. We're joined by Mr. Arul Selvan, CFO at Chola Investment and Finance. Thank you, Mr. Selvan, for waiting by so patiently. I want to first try and understand what the trends look like over the last few quarters, or rather last few months. I beg your pardon, especially since the spike in crude. Has there been a cool off at all with regard to demand within the CV space, demand for the loans that you disburse? How has it held up? Give us a sense of that.
The demand for CVs have not shown any impact. While there has been some delay in purchases, but the lights and mini lights, tractors, passenger car, two-wheelers, the demand had been quite robust. Compared to last year, same quarter, we have seen good growth, and so we don't see any major disruption there. Thankfully, the new settlement that is expected to be signed off shortly should further, bring in confidence to buy more vehicles.
Mr. Selvan, however, do you think that perhaps how the monsoon pans out could be a bigger trigger for your business?
Yes, we are largely dependent on monsoon, especially the vehicle finance side. But I think here again, though there has been a delay, monsoon has started and there has been quite good showers around. The good part is, if you see the last 2 years, even though the monsoon were within the long average, there had been trends of floods, which created actually disruption to the vehicle finance business because vehicles could not commute in those periods. Hopefully, this time, if it is better widespread, it would make more economic sense for our business, especially.
And Mr. Selvan, does this at all put your FY27 growth guidance at risk, or would you say that you're very comfortable with regard to the growth that you've guided for? Because some of these developments, especially with regard to weather related, have come in post the guidance you've given, if I've understood that right.
No, we're not changing the guidance.
Okay.
So we are sticking to the same 20 to 23% AM growth as the guidance. We will continue to endeavor to reach these numbers for the year.
And the downside risk to margin, if at all, there could be a hike in rates, at least for the moment. Things look, in fact, positive with developments over the weekend, but that's in the very, very immediate short term, right? I mean, over the last month or so, there's been plenty of buzz around a possible repo rate hike. If that were to play out, maybe in the next 5 to 6 months, how insulated are you from a margin standpoint?
Yeah, still stick to the stance that if at all there is a rate hike, it should happen in the second half of this financial year. And if it does happen also, there would not be any adverse impact on the overall NIMs, especially factoring in that the new businesses will contribute to better yields, and so the NIMs should hold, and we don't see any large impact out there.
The hike in prices at the pump, Mr. Selvan, has it caused any reduction in terms of activity on ground? You have a great relationship with customers. You have a great pulse of what's happening on ground. How much of an impact does that have, both in terms of pricing and in terms of repayment of loans, in your opinion? Is that at all playing out negatively?
No, the hike of the diesel price by itself will not be a negative. What would be negative is the non-availability of diesel or non-availability of load. Either of these would result in the movement of material being by itself curtailed. If that is to happen, yes, there would be an impact on the earning potential. Generally, our customers are not contractually obligated, so they pass on the hike of the diesel price immediately as long as loads are there to move. So they have not been impacted so far. As a matter of fact, our collections have been better over the last few months, and so we see this trend continuing. The impact would be negative if there is a complete diesel shortage or there is a lack of material to move by itself.
So, sorry, I'm just trying to, close this by asking you, all your guidances remain the same. You remain very, very comfortable, it seems, from an asset quality perspective as well. That 1.5% credit cost guidance, largely pre-management overlay, of course, largely remains the same. Nothing changes on ground for you. Is that really the verdict?
Yes, nothing changes on the ground. Only one thing, very, very comfortable is not the right word. We are comfortable. We are watching. There is possibilities things may go wrong, but it is not as of now, especially in the context of the agreement coming into play, etc. We should move from the comfortable to the very, very comfortable if everything falls in place.
Thank you so much, Mr. Selvan. Pleasure as always to speak to you. Thanks so much for coming in and giving us that clarity.
Thank you.
All right. Nothing changes on ground. That clearly looks positive from a CV standpoint. And, more than one reason why those CV financiers, Ayesha, seem to be buzzing this morning.
Yeah, 5% higher.